Hi, everyone. I'm Mike Sigal, your moderator for this session on the value of data is greater than the value of moving money. Today, we're going to talk about where the payments industry is going over the next 5 to 10 years, which I'd argue will be fully digital, larger than it is today by 50% or more to about $3 trillion a year, and with a very different landscape of players and distribution of revenue than what we're used to. I thought the best way to explore this topic was to expose some perspectives that you might not have access to in your day-to-day work, and that may help you form your own opinions about where the industry is going and where you should be investing to stay competitive. So I've asked some amazing fintech entrepreneurs and investors to share the insights behind the moves that they and their customers are making. Here's how I'll run the session. I'll ask each participant to introduce themselves and make some kind of initial assertion about the panel topic. After their introductions, I'm welcoming you to go ahead and start asking questions in the chat. But I will have a couple of questions for the panel each to respond to that we discussed ahead of time to sort of get things rolling. Before I go on to introductions, let me set some levels with a couple of polling questions that you can respond to in the chat. The first one is, I want to know what kind of companies you all work for. So if you can type in the chat bank or payments network or corporate or merchant or vendor, whatever's relevant for you, please go ahead and do that now. Cool. All right. And then the second question is to sort of set a benchmark to see how we as a panel do. So I want to ask you, if you could choose only one thing you can have, would you prefer real-time payments or real-time data? And you can just type payments or data. Looks like everyone's saying data, so we're done here. Okay. So I'll start with my own introduction. I'm the founder of 20022 Labs and editor of Tracking Payments, which is a weekly news digest of what's going on in payments, embedded finance, and modernization of the CFO stack. My background is as an entrepreneur, a fintech VC, and an advisor on innovation and investment to a number of enterprises and banks, including Swift and Payments Canada, which is sort of where I cut my own teeth on payments. And my assertion is that thanks to COVID's acceleration of digital commerce, the payments industry has hit an inflection point on its path to being eaten by software. And the competition to grab margin in the future industry has heated up. And my supporting data points for that is that pretty much everyone I talk to in the payments industry is vastly busier than they've ever been. In Q1 of 2021 alone, venture capitalists invested more than they ever have before into payments companies and digital lending companies and fintech, roughly about 14 billion. That in 2020, there were 15 fintechs that went public. And just in Q1 of 2021, there were 19, 11 of which were payments companies. And finally, from the perspective of the editor of Tracking Payments, we're picking and choosing between dozens of developments every week to decide what to write about. So with that, I'll introduce you to Lisa Shields.
Hi, I'm Lisa Shields. I'm the founder of FISPAN, which was created in 2016 to provide compelling benefits to banks and their customers using embedded banking. And so given the topic of this session, my assertion, I'll posit three things. First of all, embedded finance and cross-provider service automation, those are given. I just take those as a given. So to me, the interesting question becomes, what are the data plays of the future going to look like? And my personal view is that the next $1 trillion in enterprise value and opportunity isn't going to flow to companies that have data plays that look like today's data plays, where I accumulate data and then resell it. My personal view is that the companies that best facilitate the exchange of data between their various service provider platforms, whilst still preserving data owners' control and use in its distribution, are going to be the real winners. So in practical terms for this audience that might be, banks and payment rails, to me that means that the corollary most important question becomes, how do you actually enable more apps and service endpoints on your primitives and rails, yet simultaneously ensure that those endpoints aren't just consuming data and deriving all the value for your customers, but also contributing data and insights back to you so that you can have a virtuous circle with your customers. So that's my posit.
Okay. Eric Rosenthal.
Yes, very nice to meet you. So I'm Eric Rosenthal. I'm currently the Vice President of Corporate Development and Partnerships for Rapyd. Rapyd is a venture-backed company that's raised a bit north of $500 million. We've been around since 2016, and what we've developed is a fintech as a service platform, which basically has gone out into the world and woven together disparate pieces of financial infrastructure under a single API platform. A bit of my perspective is, while definitely VC investment, and I myself am a former corporate VC, is a strong indicator of the interests and consequently the bet of what the future is going to look like, that ultimately what we're seeing right now is really trends that have been going on for the past 10 years. Whether it's been the diversification in payment methods, whether it's been the proliferation of the use of cloud computing as well, although many times these conversations and the prominence of the networks, meaning the Visa and MasterCard networks, we're also seeing that given the proliferation of a variety of different payment rails and national payment rail schemes, that interchange is trending towards zero. And consequently, as interchange trends towards zero, it also means that pricing itself tends towards zero. And therefore, the business models that companies need to find to profit from payments are changing. So very excited to be here and look forward to having this conversation.
Terrific. Javier Perez.
All right. Well, Mike, thanks. And thanks to all of you for inviting me. And thanks for all of you to listen to us, which hopefully is entertaining. I started in payments way too many years ago. Still remember when the zip zappers were around. And now to this point where we have dematerialized payments, right? So I used to work for banks. I used to work for Visa, MasterCard, and I'm the founder of Global PayTech Ventures, where we're really trying to really get into exactly the purpose of today's discussion, which is what's next for payments. And I think that information is going to be critical. I mean, data is going to be increasingly more important, but it's got to be data that is useful for something. So where we're investing is in those companies that find user cases for data that actually are able to fix market problems. And there are plenty market problems in the payments world that need to be addressed. I also believe that payments is a huge, very powerful way to generate data, because payments is what people do, is not what people say. And if I have to trust one or the other, I'd rather go with what people do. So I think it's really important going forward that we do pay attention to what is it actually that people are doing, or what decisions are making and why. And payments is a good way to do that.
Terrific. Thank you, Javier. And Omri Moore.
Thanks for having me, Mike. My name is Omri, and I'm a co-founder and CEO of a company called Routable. We do high volume accounts payable and accounts receivable automation, which just means that we get to work through the clunkiest problems for businesses. From my perspective, I've been working in fintech and building payments platforms for the last 9+ years. For me, I really look for inefficiencies in moving money and speaking with enterprise customers about what data they need. And for us as a company, we're building essentially a nervous system for moving money between two businesses. And we always think about what are the best payment platforms, what are the best rates, and where do vendors and customers meet with friction, and how can we help remove that?
Super, thank you. So I'm gonna now invite the audience to go ahead and start sending up any questions they may have. while we dive into the first question that I have for each panelist. I always get a lot of insight about evolving market opportunities by hearing what motivates entrepreneurs and investors to do what they do. So I wanted to start there. Javier, I'll start with you. You moved from a long career in banking and card networks, and most recently president of MasterCard Europe, to set up an early stage VC fund. What's the opportunity you saw, and why are you approaching it as a VC?
Well, look, it was during my time in the schemes. I think, a lot of people, like some of you guys today here with us, or even in the panel, wanted to be, or needed to be, or felt they need to be closer to the schemes and leverage all the things that the schemes can do. Now, unfortunately, people who work at the schemes, they have a day job. And it's very difficult when people approach the scheme to say, hey, help me out, do this. Because even if you want to do it, you are not wired to actually dedicate time, effort, money, knowledge, contacts, let alone the fact that many times, Mike, you get into conflicts of interest, right? So you helping someone, you work for a large corporation, you work for a large scheme, and then someone else is going to get offended. So we quickly came to the conclusion that there was an opportunity for someone who could actually help companies in the payments space, exclusively in the payments space, with knowledge, funding, contacts, understanding. And, I think increasingly for founders to be able to work with people that understand what you're doing, that are in that trip with you, not just because of the financial side of things, but because you like what they do, you understand what they do, and you want to help them be successful. I think that's going to be increasingly important.
Great. Thank you very much. I'm going to turn to you, Eric. So you went from investing for banks and an incumbent PayTech provider to running a big piece of Rapyd, which calls itself the Amazon Web Services for fintech. You want to unpack that for us? Why? Why the change?
So I would actually say what's even more interesting to a certain degree of my background prior to that is I spent close to 7 years in public service, actually working for the UN, working for the Spanish government, and also for the US government. And during that period of time, I had the chance to live in Europe for almost 5 years, in Latin America for a total of about 6 years. And along the way, when I was working for Citi, lived across Asia. And really what brought me to Rapyd was sort of the coalition, or sort of the bringing together of all these different experiences. And really what I began to see time and time again from a corporate perspective, or even when I was at my previous startup, is that companies were looking for platforms by which they could build solutions on top of. And while it's definitely very true that the networks play a very significant part of the payments ecosystem, they are not the only component of the payments ecosystem. And then increasingly what we were seeing when I was at First Data, when I was at Citi, and even more so actually when I was at Abra, which was a blockchain company, is that every single brand in the world desired to build some type of payments rails of their own. So the major brands were looking for, and not the brands as far as Visa and MasterCard, but a brand, whether it was Rapyd, whether it was Uber, whether it was Delivery Hero, whether it was Instacart. The reality is that many of the largest brands in the world are saying we need to move money, and we ultimately own our end consumer. We want to be able to use that data, and we also want to begin to disintermediate our dependencies on third parties for interacting with them. So consequently, why did I arrive at Rapyd? I arrived at Rapyd actually because this was a company that was set out to build a B2B white label solution, intertwining all of the different payment rails all over the world so that others wouldn't have to spend their time and energy integrating to all of it and could just build on top of us.
Super. So Omri, in tracking payments, I've written about a bunch of alternative payment networks, as well as new capabilities from incumbent networks and tech providers. What sparked Routable, given the amount of competition in the market?
Sure. I think there's a good distinction here where I think Eric is coming from it from the moving money perspective, which we do as well. But My co-founder and I both had the background of building marketplaces that had to scale up rapidly, going from 5,000 transactions a month to 400,000 transactions a month within a couple of years, and then scaling beyond. When you grow, and I think Eric probably sees this too, companies switch processors over time to get better rates, to get more data, and so forth. Ultimately, connecting with a bank. That's a lot of the time. The largest companies will have a direct bank relationship. And then on the other side, they switch ERPs, because a lot of what they have to do is to connect their transaction data to what I would call their APAR data. And what we saw was in this ecosystem, you basically had to choose between, do I send money only with no finance data? Or do I slowly, as a human, try to hire more people and enter more finance data to these payments, but slow down my rate of growth, right? So it's either you're going to have a manual solution that was very oriented on data entry, or you could have a API-powered solution, a technical solution that could help you send a lot of money, but essentially ignored finance, operations, customer support, and so forth. So for us, what we identified as a gap was, how do you build a platform that served finance, engineering, and operations well enough all together? And that's where we saw the benefit. So we actually work with a bunch of different payment processors under the hood to be able to give, very much like what Eric says, the right payment method at the right time, the right speed, the right data. That's very important to us. But when companies come to us, it's because they're thinking about building their own integrations to a payment processor and their own integration directly to NetSuite when they don't have to. And we can give them one API that can create payments, have approvals, compliance, OFAC checks, and so forth, make communications to vendors and customers, but also update their ERP. So that's the wedge that we found, and that's where we invested heavily in.
Great. So I'm going to go back to each of you to dig a little bit deeper into the use cases behind what you just shared. We have a question from one of the audience members that I think sets this up. The question is the focus of what we're talking about data mining of the payment activities, or attaching the payment details to ease reconciliation? From my own perspective, reconciliation is sort of the tip of the iceberg, but it's the value is in mining the data and doing something really interesting with that. I want to, I think, start with Lisa to hear what the experience that you had for JP Morgan is.
Sure. So I think it's really interesting, Omri's story, and accounts payable, accounts receivable. That horse has not yet left the barn. There's just still enormous opportunities and enormous pain. So specifically to the question that was asked, we're no longer talking about marrying transaction data and insight, like the invoice data with the payment and having it travel together. When we think about the next generation of fintech plays and the next generation of service evolution, we're talking about the data that precedes and post-processing data that's relevant to the relationships between the buyer and the seller. And I'll give an example of that. When you're onboarding a new customer, a new corporate customer as a bank, one of the big challenges is, the vendor file, extracting information out of the ERP so that you can do something simple for your client, like tell them what payment methods might be available for that vendor. These are the type of use cases that when platforms become connected in bidirectional real-time ways, become not just possible, but innate. And that's what FISPAN is setting out to do in partnerships with banks. So we started work, to answer your question, Mike, we started working with JP Morgan Chase in 2018 onto what has now grown into their Treasury Ignition program. And what this means is that JP Morgan Chase's treasury services, their payables, receivables, cash management, become embedded directly into the user interface of their customer's ERP, whether that's NetSuite or Microsoft 365 or something like that. But what was really interesting about that, first, in the first instance, banks are a little bit nervous because the customer is no longer coming to my treasury platform. They're not coming into my building to do their job. I'm coming into their building. Do I still have this brand preserving relationship? And the couple of things we learned about that engagement were, one, treasury customers have such a high appetite to be part of the innovation cycle. A little bit nervous about putting some unpolished software proof of concept in front of treasury customers. Oh, they were delighted, and it led to a whole series of ancillary and sort of unexpected benefits. Like the TMO officers of the banks were more able to have, robust conversations about other sales products, et cetera. So when we think about payments and data, we think about the data that the bank doesn't have today, and what's the fair trade with your customer for that data. You're providing a ease of use, straight through processing, enhanced risk. And how can you, if you do have access and permission to that data, provide better, more highly valued products for your customers in the future? Not sure if I answered the question you actually asked, Mike.
No, I think you did. Let me ask two follow-ups. One, can you quantify in any fashion the benefit that your customers are seeing as a result of this embedded finance for corporates?
Oh, it was trivial. I mean, it was very easy and unexpected. We thought the benefit would be happier customers. The benefit was 50% increase in deposit and 75% increase in transaction volume in the mid-market. So super compelling.
No value there.
Right. So,
and let me transition by posing another question. You'll probably know for Canada, and the others will know for the rest of the world. Is there any current regulatory blockage for banks managing or running analytics on that data?
Oh, that's a fantastic question. Sure, every company in Canada, banks included, are subject to data use, and British Columbia has a rule, Canada has its national rule. But that's the corollary of the future of data exchange. The future of data exchange data must be watermarked, right? You have to get permission as to the use of that data from your customer. And that doesn't make that data less valuable. In fact, it makes it more valuable. So the answer is 100%. The exchange of that data has to have clear boundaries over why it's being exchanged and what are the downstream permitted uses of it in Canada and in the United States. Even if it's not a regulatory mandate, it would be an absurd business decision to do otherwise.
Or in Europe.
Super. So let me switch to Javier. So you're investing in new capabilities, if you will. And we talked previously about one of your companies, Subio, and I wonder if you can talk about what they do and what the insights behind what they do are.
Sure, absolutely, Mike. So first, maybe if you allow me just to follow up on Lisa, another investment we did was in Cardlay. This is a company that issues virtual cards. And they have agreements with large global players. One is FIS, another one is coming very soon, which are companies that put software inside large corporations so they can simplify acquisitions, purchasing programs, right? So what Carla does is they put a digital card inside that PC, that computer that people are using to make purchases. That automatically means that every purchase is under one account, gets automatically authorized, it's on the expense is automatic, and so on and so forth. That, I think, to answer your prior question, my view is that yes, reconciliation is important, and that's the entry point. But what we're seeing is that once you get past that entry point, all the other benefits, like better budget control, online, better information as to what's going on. Is the money used rightfully with an authorized supplier and so on? It's essential. But moving on to Subayo, it's and the importance of data, how payment data is important. That's the only thing Subayo does. This is a company which is in Denmark. And what they do is they help banks understand what their customers are doing with their payments. So, and there is a whole bunch of stuff that we don't realize that we are saying about ourselves by the way we spend money, by the things we buy. How do we buy them? So what they do basically is just they produce insights for the banks and say, look, this is what your customers are doing. This is what, sometimes it's very hard to dig out whether your sports membership to a particular gym is a gym or is it Netflix, for example. Well, that one is an easier one. But so to understand all that and come up with recommendations and ways for the banks to provide better services to their customers is really important. The obvious one is subscriptions, cancellation. If there's a special offer, if AT&T, if you're a client of, let's say, whatever company, I'm not going to mention companies here, but a telephone company, and then someone else comes with a better offer, so you can extend that to your clients. Understanding that, what your customers are buying and whether they have the best possible deal. And in a way, these are all European stuff at the moment. This is happening elsewhere in the world. But in Europe, the banks have the label of being remote, distance, not preoccupied with their clients. And this is a way for the banks to show that they can actually care and try to do things for you as a consumer.
Interesting. There's a use case that I wrote about recently, which is combining carbon impact data with payment data to help consumers decide what products they want to buy that are conscious, if you will. And Stripe and Klarna and Adyen and even MasterCard have rolled out these products to help move purchases to sustainable products. And so let me turn to you, Eric. You've got all types of clients and all types of use cases. You have favorites?
I have my favorite clients and I have my favorite use cases, but I prefer to talk about use cases, not to offend anyone. I'll actually take a step back and actually say, first of all, what I find most particularly interesting about Rapyd is, while there's many platforms in the world or many other companies in the world that say that they do pay-ins and payouts or AR and AP, in the vast majority of cases, they find when a client goes to integrate into those companies, what they find is, yes, from a sales perspective, they might offer AR services and they offer AP services, but from a practicality perspective, there's two different platforms, two different integrations, two different contracts in some cases. We find that about 30% of our clients are using us, accounts receivables and accounts payable solutions, and they're integrating to one platform. They're getting one dashboard. They're getting one reconciliation report. And that is a fundamental difference in how things, let's say, are working. Many other companies that are our clients, nonetheless, end up using us sort of in a journey. So one of my favorite clients is a company called Hotmart. Hotmart is sort of an under-radar company, but it's backed by General Atlantic, has raised millions of dollars. And what it does is it helps digital content producers produce content and then publish it on the internet across YouTube and other variety of different platforms and then get paid. And what they did is they were using one provider for card acquiring in the US, another provider for card acquiring in Europe, out. And what they're doing with us is they're using us to integrate and deploy payouts all over the world. So we now pay out for them all over Asia, all over Europe, all over Latin America. And then they also just began the journey of beginning to issue cards for the content producers so that the content producers can get paid directly to that card. So they get paid faster. They get obviously the benefits that come along with having a card. And most importantly, what's very interesting is that unlike many other platforms that would sort of fear this happening, what we're actually seeing is a volume in this, where they're launching these cards in Brazil, the volume of payouts into Brazil that we have with them is actually falling at the same time that the volume going to the cards is increasing. And many other providers would most likely, for lack of a better term, start freaking out because they're only really a payouts platform, or they're only really an issuer processor platform, or they're only really a platform that pays into one country. Or in our particular case, because we can offer all of those services and all of those products under one platform, we actually find delight in the fact that they're diversifying the use of the platform and able to do that. So once again, one reconciliation report, one single dashboard, and one integration.
Interesting. Okay, got it. And so let me ask you, Omri, to sort of build on that use case from what you shared with me about Reebok.
This is not Reebok necessarily. This is Reebok's in the ecosystem. I just want to clarify that.
Okay, thank you.
And I do have to do a +1 to Eric's comments here. I think that companies are looking for one solution for moving money in and money out. Just like Rapyd is doing it, a lot of companies go to Stripe Connect for that as well. I think that's very prevalent. And moreover, I do agree that it is the responsibility, I think, of the startup or the tech company to give them flexible payment options, because payments trends move. And I think that if someone moves, let's say 80% of their spend from, same day ACH to card, that's not a bad thing. It's just the business is moving how they're moving money, and they're reacting to their vendors and customers, which I think is what the business's responsibility is supposed to do. What I wanted to highlight is just kind of the innovation of, you won't think about this as a fintech company, but we recently talked to a company that is helping Reebok promote products through Twitch streamers. And the reason they came to us is because they needed a scalable way for commission payouts for these Twitch streamers who are essentially in the middle of their streams, just promoting shoes, athletic wear, all that stuff for Reebok. And the greatest thing is I actually also have a background in building Twitch analytics dashboards. I did that a little bit back before Twitch was really popular. But what was really interesting there is, and I think every bank should know this too, and everyone here, is that Twitch streams get more views than Super Bowls. So when a game launches, you typically get twice as many views and way more engagement on Twitch than you would from a Super Bowl. And in the United States, at least, Super Bowl is kind of the media event of everything, where you would try to spend millions of dollars promoting ads, in-person event, all that stuff. And I think Twitch right now is the least, taken advantage of platform for reaching consumers and reaching people who could be banked. But we just thought that was a really interesting use case of, when you think of commission and affiliate payments, obviously that makes sense from a B2B transfer perspective. But when you add Twitch and streaming and you dive deeper into this weird niche, it was really just fun to discover how they wanted to move money, just like a typical affiliate network, but their use case was so unique to the modern world.
Very cool. So let me ask a follow-up question to that. The Twitch use case, at least right now, to me, seems like a relatively small thing. Can you talk about what you see in that use case that's indicative of where the market's going?
Sure. I'll put it this way. So Twitch, let's say TikTok, there's now Clubhouses prevalent. I think that the creator economy is growing rapidly, and we're talking about data, right? The question is, how can you pay as quickly as possible to these folks that are promoting goods and services online, and how can you give them access to what they're getting paid for as quickly as possible? We're seeing a lot of creator economy companies coming to our website and asking, I'm sure, Eric, you guys are seeing this as well, and trying to figure out the most frictionless way to pay and inform the recipient of funds what's happening. I think that a lot of the time companies help move money, but they don't help demystify why the money was moved, how it was moved, when it will arrive, proof of funds, all that stuff. And a lot of folks are coming to us because what's really interesting with the creator economy is I think that there's less patience for transfers, right? So I think that if you send $1 million transfer to FedEx right now, they have an AP department, right? They're going to be receiving it. They have an AR department. They're used to delays. They're used to all the different ways to, share a remittance slip and so forth. But what's really interesting is with the creator economy, think about these as individuals, but they're mostly LLCs. So they have businesses. They're valid, legit businesses. But I think that they're much more used to getting paid now and getting paid as soon as they did their work. And it's really important for them to have speed. You earlier asked speed versus data. They want both. They want to know exactly what event they got paid for. They want to know when. If it's based on the amount of goods they sold, they want to know all of that reporting as quickly as possible. And they want that data ideally same day. And for Eric's point, for example, funding someone's card is an ability to do it very, very, very quickly. Making a wire takes a lot of time.
Yeah, I think that what I would say as it relates to this conversation that we're having about data is many of the data conversations as it relates to payments generally gravitate towards the topic of how do you monetize the data? Very simply, how do you make money off of someone else's data? Or how do I make money off of my own data? And while that is a very, very valid interest, the movements that are blocked due to compliance reasons. Say that again?
I was going to say, you're breaking up a little bit. Would you mind turning off the camera?
Sure. So I was just saying that I think a lot of what we see is much of the discourse or dialogue around payments generally gravitates towards the monetization of data. How do you actually make money off the data? How does a retailer take the payment behavior and know what to sell to the person? How does someone take unstructured data and provide that person with another loan? All very, I would say, at least what I would hypothesize, the vast majority of when data is really needed in the world of payments is unlocking data or unlocking payments that are blocked or unclear on who their destination or where the destination is or where the money is coming from. It really comes down to compliance in many cases. Operation Choke Point that happened ultimately and led by the US and really transformed. Did you lose me entirely?
We've got you back. We've got you back now, so go ahead.
Did you lose me entirely, Mike? Sorry. I was just saying that I think that sort of what Omri is saying here is that being able to set up a remittance file really has to do with, do you know the person? Do you know who the person is? Are they a valid recipient? Are they actually an OFAC list? Are they not on the OFAC list? And consequently, it's a relatively boring topic. But those of us that are sort of in the guts of payments recognize that the vast majority of data is used to assure that there's no risk between the transmission of data between point A.
Eric's breaking up, so
yeah,
I'll pop in. Because I think this was a really interesting, there were some interesting points. But I think I'll pop in there because it's really interesting. Between Eric and Omri, they said a couple things. So the customers at Rapyd are examples of these new platform companies and this new creator economy that Omri was also talking about. I'm on the board of a company called Thinkific, a Canadian success story designed for creators who start a business, education businesses, right? So they monetize their education businesses. But what I see is the point that was made about everybody wants to monetize the data. These new economy companies that are the customers of the Rapids of the world, they already have the data. They're adding payments and then monetizing payments on top of that. And that's what Shopify did, right? You've got the customer, you're providing the core service. You're the core business platform of the next generation and the new generation of companies. You then come down and add payments and add financial services and own more of that business from woe to go, more of that share of total opportunity servicing that customers. So when I think about banks are already monetizing payments. The challenge for banks is they don't have the data. And so how can they monetize the data? That's what I think is an interesting position for banks. And so I see one of the questions in the chat is, what's the future of banking as a service? And again, we'll go back to my original posit, which to me, the challenge is when you accept that embedded banking and embedded commerce and the rise of the platforms being serviced of the likes of the Rapids of the world, Canadian banks are going to need to partner with these platforms and be the primitives underneath the Rapids and the Stripes. And that's a really smart play, and you're going to drive payments volumes. But the other part of the puzzle is, how do you partner with Rapyd or Omri's company in a way such that there's a fair exchange of, you're providing this service to them, right? You're providing this great payment service. They own the end customer relationship. Is there a way for banks, as they navigate embedded commerce, to get quote unquote fair access, permission by their mutual customer? And to me, that's going to be not the fight, but the evolution of the market in the next 5 years that I think will be very interesting.
Lisa, just wanted to add a comment there. We choose partners to move money with based on speed and data, right? And like, I know, Mike, I'm sorry, I keep saying speed and data.
No.
And I have to choose both, but we have a lot of these conversations where we want to be able to go to a business partner and to say, hey, you're flying blind through moving a lot of money. Let's give you the most fidelity. If you think about it, we have all ERP data, all bank data, all transfer data, all communication data per transfer. That is mind-blowing to most banks. And I think that one of the biggest opportunities that we've been wanting to see in the United States, but I would kind of encourage in Canada, is actually to build an open ledger kind of standard or mandate of how banks can move data in between each other. I think one of the biggest things that we struggle with is that every bank that we talk to, every platform that we talk to is different. And I think, there's two things. It's how can the banks make more money, but also how can we adopt faster innovation? How can we bring more customers? How can we tell bigger businesses to build here? And I truly do think that if there was a partnership between banks to really talk about what is the critical data that you need, but also what is the critical data that companies can give to you, that would make partnering and scaling. And, Mike, you said 3 trillion. I think it can go way bigger than that, right? I think that there's movement here for this being, a flow of information first and foremost, and not just a flow of funds. And
so Omri, just to make it crystal clear, when it's super cool when you go to your bank, or when you go to a payment provider, and you're saying, hey, you're providing the best service. I'm going to choose you because of speed and fidelity. I have all this data. How many of the banks that you engage with start out by asking you for the data versus you going and saying, I have this data, we should talk about a true partnership here?
So I'll tell you this, we actually interviewed 100 banks within the past 12 months. And when I say we interviewed, we made a 60-page packet, dense, with additional flow charts, all these things. And we interviewed 100 banks, and we really dug into their capabilities. 2 were decent at what we wanted to do. And it took us prying for questions. So I also think on what you're trying to communicate here, Lisa, having a bank that invests in making data, starting the conversation with this, right? Saying that, using that as a leverage point and differentiation, I think is a huge thing here, because companies grow and they are looking to partners with banks, right? But I think that today, one of the things that we look for is what differentiates banks from each other when we go talk to them. And a lot of the time we have to have 4 or 5 conversations before we can get into the meat of things. When we share data, right, we actually did an RFP, Lisa. So we gave 60 pages up front of all the data that we have, all the stuff that we had. But what was really interesting is that we could not get information back from banks easily. It took us weeks of conversations with each one. Now, we're in a really good position now because we know how to build the infrastructure moving forward, and we're really excited about it. But it took us a year to do so. So I definitely think that there's huge competitive advantage by having teams that focus on data, infrastructures, banking APIs, anything that can say, how can this bank be a node and attach itself to the movement of funds elsewhere?
Perhaps maybe if I could, the Europeans came across this thing about 3 years ago. And when I mean the Europeans, I mean the federal government, right?
Yep.
And they ended up with something so-called open banking, where you are legally mandated to respond to an API that is sent to you by a registered open banking participant. And it doesn't take a lot to be an open banking participant. Now, I have to tell you that has indeed moved the market. You'll see a lot of people today, whilst they're starting by launching APIs today, basically inquiring about what's your balance in the bank and what was the transactions you did in the last 6 months, because that's what the law says you got to provide. And they use that for giving you credit. So that is kind of moving the market forward, that's for sure. Now, whether on this side of the ocean, they would be willing to go that far, it's a tough question, right? The other part of the same thing is the market-driven forces, right? There is another element of what are the market-driven forces that are forcing that movement? And those are, the typical European example would be Klarna. One of the big data uses in any financial world would be credit, just to provide credit to people. So, and they started before open banking. Open banking has helped them, but the market forces and what they did to be able to get into deals with the merchants. So the merchants who actually want to sell more and therefore would be willing to be part of that partnership to provide information and simplify the Klarna experience has been very helpful. And today Klarna is a huge success. And of course, there is two dimensions we're kind of talking about here about payments, the basic of payments. So you were saying in a basic payment, I need to understand that you is you. And again, the federal government in Europe decided to step in and say, you're going to have a digital ID eventually, right? To make sure that you is you and therefore validating properly a basic payment and then providing added value through open banking on that overlying layer, if you like, of information, of riches of information that allows you to use business cases for actually making money. And this is kind of what we're seeing in the European scenario.
Yeah. One thing to comment, Javier, on that, I would only dream of that being here in this side of the hemisphere. But another note, I think that as a company, we don't want to just like go to a bank and squeeze them for rates and speeds, right? We have data that we can exchange too, as Mike, as Lisa has brought up. So there is an opportunity for banks in Canada to try to create a standard, but also try to create a standard in what is the data they want to ingest in, right? That would be very interesting from our perspective to know, because if we know that, hey, we want to partner with 20 banks in Canada in 2022, and all of them require at least these 15 data points, there might be micro ones that are specific to each bank that they want more details. But if we can confidently share that data and we have a rail that we really believe in and we trust and we know it's supported and we know it's maintained, then that is an easy conversation to have. I think it's when every bank processes and ingests data differently, that becomes very difficult. And that puts the onus on us to figure out how to push data out, which when we have investors such as yourself that are telling us up and to the right always, that is a question where we say, do we want to build more infrastructure or do we want to move more money, more customers, right? And I think that the board will always say more money, more customers. So the more that banking systems do to make the entry to the conversation easier, I think the better it is for the bank over time, even though it's an initial upfront investment.
I couldn't agree with you more. If I could, just really briefly, I don't want to,
Unfortunately, I've got to stop you there, Javier, because we've only got a couple minutes left. So I think to summarize what I've heard from y'all is that, and this is putting my own spin on it, that traditional financial services, whether that's payments or loans or what have you, are rapidly becoming commoditized. And in fact, what the customers want, whether they're companies or consumers. They don't actually want financial services. They want everything to be easier so that they can grow faster or complete their transactions, like in the case of the ESG data, in alignment with their values. And as financial services providers, we can't give them that without considering what happens before the payment and what happens after the payment, and giving them tools to make that happen. Would that be a fair summary of what you shared? Awesome. All right. So let me repeat the poll from that I asked before, and I'm suspecting not much has changed, but as the audience, would you prefer real-time data or real-time payments in order to maintain the competitiveness of your companies going forward? Go ahead and type it in the chat. Okay, we're not getting much. All right, so I'm going to assume that everyone still believes data, or I'm going to hope. So let me ask for any closing remarks from each of our panelists, and then I'll thank everyone. Lisa, you want to go first?
Yeah, my closing remark is it's a really exciting time. In the last 3 years, I've just seen this sea change in appetites for banks partnering with fintechs and how they go about thinking about these partnerships for the benefit of their customers. And so this next 5 years of actually looking at data exchange for mutual benefit is pretty exciting for me. So thank you very much for having me.
My pleasure. Javier?
Look, I will tell you very easily. I mean, basically, I'm going to say that banks will not be able to survive going forward without fintech. I don't think the banks have the people, the bandwidth, the ability, and the focus to bring to market the kind of things that the consumer wants, expects, and take as a given. If they don't, the neobanks will will be winning, which I don't know if you want to call them, whatever you want to call them. You could say, well, they are a bank anyway. But there will be a massive transformation in the banking industry. And I do believe that banks will adjust, banks will partner with fintechs, and banks will step up to the plate.
Thanks. Thank you. Eric?
Sorry for the next time. So I think my closing remark would be, there's lots of buzzwords in everything that we discuss, whether it's embedded finance, whether it's monetizing data, whether it's speed versus this versus that. I find what's very interesting, and I think where the most opportunity resides, either from an investor perspective or from a business opportunity perspective, if you're a startup or you're a bank that's looking to partner with external parties, have a healthy dose of cynicism when you hear too many buzzwords. Dig a little bit deeper, look beyond the surface, because how things actually work under the hood is what really matters. And in many cases, the unsexy topics, whether it's compliance, whether it's fraud, is where much of the opportunity, I think, continues to reside inside of the market.
Super. And Omri?
My closing remark is, I think it's important as a bank or as an investor or whatever your position in this, people are going to care about data and speed. I think it would be wise for you to decide if you're going to be excellent for consumer data and speed of payments or business data and speed of payments. I think that level of positioning will be really important in how you pitch yourself to the integration partners and processors and companies that spin up. It's obviously awesome to do both. It's hard to do both. And I think it's different levels of data, it's different levels of speed. So I would recommend to pick first, kick ass in one, and then venture into the other.
Super. And I'll give a closing remark just by making a pitch. If you want to keep hearing these kinds of insights, go to trackingpayments.org and subscribe to the free newsletter. We do a 5-minute read once a week that picks all of these themes up, sort of news digest. And with that, I will thank our panelists, and I will thank our audience.
Thank you.
Bye, everyone.